to April of 2022, the median home price of a home here in the Coachella Valley was $740,000. So when you look at that, again, that's here in this market. Every market's different, but I would suggest this is indicative of overall what's going on. When you see that, April of 22, median price at 740, same market here in January 26, it's 6.25. Well, isn't that the kind of improvement in home prices everyone's been looking for? And so if you think of it that way, hopefully this has become a pivotal moment where people are waking up and realizing, hey, wait a minute, we may very well have a pretty good opportunity here. And it could be that we can now finally get into home ownership in a more affordable way. So that first bullet point here in our valley is supported by the data. Home prices have improved by a measurable amount, and that should get prospective home buyers excited. Now, the next bullet point we're going to pull up, it's talking a little bit about the 10-year bond yield. And the predictions here, this comes from Housing Wire, is that the 10-year bond yield is going to be in a range in 2026 of 3.8 to 4.6%. Well, number one, I would say that's a pretty wide range. So it's interesting that they would provide that. In a way, it's kind of, I think, kind of holding back a little bit, holding their cards back in case they don't want to be too aggressive on the downside of that range, and so they want to leave that up to 4.6 in case things snap back. And of course, as a consequence, they also suggest, well, rates could be between 5.75 to 6.75 for this year. Well, again, that's a pretty wide range. And so in my mind, that's kind of a weak forecast. It's like they're lacking courage to be a little bit more bold about, can we get that range narrower and more on the lower side. So I'll remind you that most of the major players, Fannie Mae, Freddie Mac, Mortgage Bankers Association, most of those are still forecasting that 2026, the end of 26, rates could still be close to or at 6%. So this current phenomenon, this current optimism, I think, could be a little overdone, but we're going to talk a little bit here in just a second of one of the reasons we've got this sudden, improved forecast and improved sentiment about rates, which again, I'll comment on that in just a minute. So I just want you to be aware that, yes, things have gotten better in terms of the rate range. I think we are going to be on the lower part of that 3.8 to 4.6 on the 10-year bond yield. I think we are going to stay more in the low 6s to high 5 range. I will point out to you, with all this euphoria about rates have suddenly gotten a lot better, September of 2024, when the Fed